Right? They call it a liquidity sweep. They call it a stop hunt, according to where you're hearing, right? So what it is basically, it is look like these fake outs in the market here. Alright, so you have a little support level here. See this little wick here? This is a liquidity sweep or stop hunt. Alright, it does look like these little areas below the low. These little things here. Sure you get that already. Right? You enter a trade or the market move impulsively in one direction, make it feel like you're going to go somewhere, and then it is just go in the opposite direction. Right? This candle here could be one too. Right? These things here. These are the manipulative trades now. And I think Friday we get one too, and the market move red impulsively in one direction, and then let's go the opposite direction. Right? This would be a big green candle. So what that does do is generate liquidity. But to understand how it does really work, you know what liquidity is, right? So in the most basic form, liquidity is money, right? So whenever you hear anybody say liquidity, that's what it pretty much is money, right? So for the ones who have been here a while, they would understand where money is in the market, right? So money in the market is up here and down here, right? So let me explain that more. So liquidity, which is money, is where people stop losses. Liquidity is money, money is stop losses, right? So there are people who go be long in the market buying, so the stop loss will be below here, and then it would have people who sell in the market, right? Who think the market might go down, and the stop loss could be on top here, right? So in any market, any pair, anything, it always have buyers and sellers, right? So in your local market, wherever you're from, right? That mean from Bigo here, it mean from Arima, Central, Town, wherever you're from, it's a market by you, right? In the market, everybody simply doing two things, buying and selling. When you go in the market, you don't do nothing else but buy and sell, right? So that is what market is. That's how it is look as how it's operate, right? Only people buying, only people selling. The reason it's called the market is because it's the same thing. Like all we does do whole day when we come on the charts. Look for opportunities to buy something and look for opportunities to sell something. The marketplace, right? Now, in the market, it have institutional traders. Now, we always hear the term, but to understand, for me to bring the point across, I have to understand what institutional trader is also, right? So an institutional trader is somebody who working for banks and hedge funds. A hedge fund could be anything, and a hedge fund is just if all of we here pull up money together and we start trading it, that we pretty much have a hedge fund, right? So people let's just put money together, right? There's investing in companies or persons or whatever, and they essentially get that person a mass of money and we share profits, right? So we pool money together. There's a hedge fund, an institution is pretty much a bank, a credit union, anybody like that, right? The regular financial services that we are accustomed to. Now, there are traders who work on a trading desk. They work in for the bank, right? So they just get a salary, right? And then they just get little bonuses and when it doesn't make, X amount of dollars or whatever. It are proprietary traders, which you guys would be, right? Or they would just be remote, right? So it have proprietary desk traders, where it have smaller prop firms like the prop firm Trade Mastery. It will have traders in there working for them and stuff that they hire. And then if you pass a prop firm, you'll be a remote proprietary trader, right? So it's a prop trader. So you're trading for the company, essentially, as a contractor, right? We eating our food together. Now, these guys' job is to buy and sell things on behalf of clients. So we just a trade goal, but as well you know, is a big open market of things to trade. We have stocks, we have different cryptos, that are different commodities, silver, oil, whatever, right? So based on the interest of clients, these guys in the bank, they just be trading things on their behalf, right? Now, how it would work is that you're working in the bank, and you trade on the desk, and you have a client. He does, right? Yeah, $500 million, right? With the 500 million, he want to buy some. So let me go. Let me see. Let me make it more real. Right. He's a man come and he want to buy some Tesla stocks, right? So yeah, 500 milli. You want to make an investment, right? Now remember, so let me just use this. We'll use this area here as an example, right? For illustration. So he have $500 million, right? So trading is a game that rich people just play. Never forget that trading is a game, right? Trading is not don't put the pressure on it that we as we are applying. It's a game that rich people play. A couple of years ago, you couldn't open a trading account with less than 25,000 US, and it need to be called something called a sophisticated investor in order to be able to take trades. So that's like some of you sign up for Tickmill and thing, and you had to jump through all them different hoops. It is financial services, so it's not designed for people who don't know what they're doing. Because obviously, quite the vast majority of people don't know what they're doing, right? Clearly, right? All of us here could be considered as people who don't know what they're doing. So it's not really for we, you know. It's kind of for them, right? But it's the opportunity to generate more money, to grow their little game, so they invite with a play now, right? But we don't necessarily know the rules. We trying to figure it out, right? Now, when this man who has $500 million come, right? He said, "But I want to buy some Tesla stocks." So he know why he guys thing. You know, if I would have 500 million, he probably have a friend who have 500 million, right? So people on the bottom, there's people on the top let's collaborate, right? People on the bottom let's compete. So it's only poor people let's fight on each other, rich people let's link with each other now. So the people on top, like you know, here you seen, bro. I got S, you can buy some Tesla stocks, thing. So he have $500 million to buy Tesla stocks with, right? Cool. Now, in order to buy something, people have to sell it, right? You don't just buy unlimited amount. Remember, Tesla is a company. It have a limited amount of shares or stocks on the market available for purchase. So you can't just really buy how much ever you want. So let me make it an even simple example. You live in Trinidad, you want to import some vehicles, right? You need 100,000 USDT to conduct your business. So you need to buy 100,000 USDT. But where again the USDT from? Now you have the money to buy it, but you need a supplier. You need somebody to sell it. Remember, this thing that we're looking at here is just simply buyers and sellers. I want something, whoever to sell, and give me a good price. That's why we just buy low, and that's why we just sell high. I have something to sell, I want the most amount of money fade, and I'm looking to sell the tops, right? So if you think about trading as that, cool. So yeah, your 100,000, you need to buy. You have money, you need to buy 100,000 USDT, but you need somebody to sell it to you. How are you going to get that 100,000? Right? So this is the position you face as a trader with your client who are 500 million. You want to buy some Tesla stocks, but you don't really have enough Tesla stocks for me to buy. Now, if I just click the button anyway, right? So this is the process, right? Because liquidity sweeps is a very real thing. If it is, I click the button and I just buy 500 million worth of Tesla stocks, it would artificially inflate the price of the stock. It would just shoot up. You would get a big can out of nowhere, right? It would inflate the stock, and that would cause the stock to drop drastically. People will short it. It will create a bubble. And when you hear people talking about bubbles in the financial market, it's things that overpriced or overvalued. It comes like it's more hype than it really is now. So I don't have any examples of the top of my head, but anything that had a hype and then they finally try it out and then they realize this thing is trash, you know. I hear men talking about this thing and this thing already so good. That is what a bubble is now. It artificially inflated, right? So if you can't just click the button anywhere and just send up the price, and that is one. And two, your client, what the best price for you? You're trying to buy something low for a good price, right? So you want to buy something low. You want to get the best value for it. It's your job as a trader to get a good value for him, right? Because you're waiting to go up, so you want to get a good position. Now, as we know, we can't move candles. We don't have the money to generate to move candles. They can. They could move candles. So they could essentially manipulate the market. Now there are something called market makers, the people that who just generate the things you see in here. Right? This don't just happen magically. Right? If you look at the New York Stock Exchange, there are market makers, people who just do the things with this price. So you trading, hail your market maker and let them know, bro, I have an order to fill. So if you ever watch any kind of documentaries, any kind of institutional, videos about trading, you would hear them speaking like this. So this is the concept. I explain it to you how you would have heard it, and now if you to understand. He go ball out the window. Yo, I have an order for some Tesla stock, but they get 500 million worth of that, but yeah, for me. The market maker would then say, well, all right, the price is currently, there we say here. What he will do is generate the Tesla stocks for you. So how that would work? He will artificially send down the price for you as a retail trader to urge you to sell or short. He will manipulate the market for you as a shutdown who don't know what to do to artificially start to sell the market and trap you on the wrong side of a trade. You know who already own Tesla stocks, you are going to put yourself in a bad position and they are going to take your stocks from you to give to that guy. That is what a liquidity sweep is. Artificially make the market go, so they generate liquidity. So if I hear that, that is what generating liquidity is. They're making the trash guys like you and me get FOMO and jump in and trade impulsively. Because remember, the trade is emotional. So they make you jump in an emotional position to sell your things artificially. So let me go back to you have your 100,000 USDT you want to buy. Now let me say, for whatever reason, every 100,000 people in China end up with $1 USDT. Right? If, as traders, everybody here would have buy a substantial amount of crypto, everybody on this call bought no less than 100 USDT before. Right? Everybody on this call. Now, if somebody come to you bragging that, bro, I'm gonna give my $1 USDT, dog, talk to me nice. If a man bragging to you have $1 USDT, you go laugh at him like, bro, that is nothing, bro. Bro, you can't even send out your wallet. You understand? The minimum is 10 to send out. So if a man bragging to you that you have $1 USDT and he real hyped or excited by seeing $1 USDT in your wallet, then you probably know that man don't know about crypto. If you're excited to see $1 in your wallet, right? That man know nothing. Now imagine you know as a guy who know what you know, or a lady who want to call. Imagine you know what you know about trading and crypto, and that man has $1. Let me say you were your $100,000 in USDT to buy, and 100,000 people have $1 and them moving like that guy, and you have the ability to take them $1 for your order to fill. They will take it. So what you would do now is you would create something in the market, right? Because on all of they're playing, and you have the ability to do something. You go thing and generate some kind of thing in the market and take everybody $1, make a clean sweep, whap, give me that $1, but you don't need that. Okay, you don't know what to do with it, right? So give me it. That is what a liquidity sweep is. The market does generate orders for clients. They just take out of your hand. Trading is a zero-sum game, meaning in order for you to win, somebody have to lose. Things aren't created here. This way you're looking at, nothing is created, right? Things just change hands, right? We don't make more of the thing. It only have a certain amount of Tesla shares that will be released. They already have what they have. As the company go up in value, the share price would increase, making it harder to obtain, right? So it have people who would have it wherever they have it, right? They have it down here, and they decide by no, I don't know if all you know, right? But in the stock market, trading stocks, right? Like really trading stocks is where all the money. When you hear people talk about investors, and then we like to throw around them terms here loosely, but the investors is men who have millions, hundreds of millions, billions of dollars. Right? The other day, was that meme going around where when the stock market was plummeted, right? And it's I can't remember what it was, but that particular crypto was down. I think it was down like 35%. right? And it was let me say $1 billion, and it was down like let me say 35% was $1 billion. Let me just say, and the crypto man, people who trade crypto was laughing at stock man because the stock was down like 2%, and man was balling, but the 2% was like $10 billion. You know what I'm saying? So the man who trade in stocks, the real investors, the money men playing with these things now. Indices, trading Apple and Tesla and Nvidia and thing, right? We trade in gold, we have it, you can trade currency, whatever, it don't matter, right? But they where the money is now, right? So it's big, 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 huge orders to fill, right? So as the price go up, we got men who had a thing down here, and they decide to sell up here, make $50 million profit. Cool, I will cash out. That's where the money play now, boy. Right? Big, big money in here. Right? Remember, it's billionaires in the US, Right? Think about a 2 million TT. Where you go buy with 2 million TT and then, think about having a billion US. They were watching the lifestyles, but the lifestyle we've seen is in US dollars. Think about like riches now, you know what I mean? It's our guys who cream up, dog. And you use the richest man in the world, bro. Right? Unlimited money. Right? So you make 50 million. Boom. And 50 million you cash it out now. Right? So it make these stocks more expensive, so harder to acquire. Right? But it don't make more of it, and it just make it harder to get. Right? That's essentially how that is work now. So let me go back to the humble little goal. A heavily manipulated pair. One of the places that if you could master that here, you're bad anyway. Right? So gold, I know everybody here trading gold, they might be like it and anything. If they leave gold, I don't know, they find their own little niche, or they'll get real bad because gold is notoriously difficult to trade. I find it very easy. I sure a lot of you would find it very easy, and you're actually learning to trade on one of the hardest things to trade on. Man, it's ball when you hear it. It's tell anybody you're trading gold. Well, they're almost certain you're not getting through. Right? Because of how notoriously hard it is to trade. But it's just the fundamentals, right? So this year, these things is liquidity sweeps. Right? We decide to short, we artificially bolster the market to make it look like something happening, and nothing happening, we short you. Right? Trap you on the wrong side of our trade now. So how we does don't we understand what a liquidity sweep is, right? Where we just find them and how to use them or essentially duck them. Now you can't use them. You could use them, right? I personally not super sharp on using them simply just because how conservative I am, right? But I know how to duck them for the most part. And I see human too, some of them might get caught up, right? They sketch me too, right? But rarely ever, hardly ever, right? So liquidity stop on so liquidity sweeps generally there's always be formed around support and resistance. Support and resistance, but you get a good few touches, right? So it doesn't know when it's going to happen. It have nothing to suggest that one going to happen now. You don't know, right? But what you would see is to be able to identify them if they do happen, right? So like things like DC and thing could be there, right? These abnormally long wicks. You just know them when you see them, It just be real impulsive. And just Tuesday or Friday we get one of them somewhere in the market, probably in a lower time frame if I see it. So there's usually happen around support or resistance areas, key levels, right? Now, most of the trades that I lose, that's like so the Bitcoin trade that I called Friday actually did start to buy. I just take an impulsive entry thinking, well, but I'm gonna be time the market and this might be the bottom, right? I thought it would have wick out and go back up. It pushed down a little bit and then it eventually went up. That's fine. Now, most of the trades I would lose, I would take trades like that. You try to predict the market. Now, the set trades I take, I don't ever predict, and I started never to predict the market simply because we doesn't know. Right? Nobody can predict it. If I could predict the direction, like prediction, as in I know that 1,000% certainty going to go in a direction, you will be a trillionaire, bro. And if you always know where the market going to go, the fact that nobody is a trillionaire on the own of a trading simply means that it can't be done. It is one of those things in life that Never going to happen. They say never. Yeah, nobody will never know exactly what's going to happen because it's human fear and greed and emotions, right? You can't gamble on what a man thinking in your head or what people feel. How you going to predict what a boy breathing in your head? Nobody can predict or know what's going on in your head right at this moment as I say this. Nobody could know what you thinking about. I could be talking to you and telling you this, and your head could be thinking about a cat. You know what I'm saying? You could be thinking about the transmission. Nobody knows, right? Only the Father above. So there's no way anybody could for sure know what will happen, right? So we don't predict it. Now, at these areas, right, what does happen is that a lot of people, retail traders, I am a retail trader also, right? We just predict or try to guess what will happen, right? And so what we would do is that as the trade reach down here, we just expect it to buy, because it reached support. So think about maybe in your very, very first, set of trades that you do for yourself. You think about it. You learn support and resistance. And the market reach a resistance, it go sell. And when it reach a support, it go buy. We know now it's not so cut and dry, right? But that would they teach me, support and resistance, right? No problem. Now, imagine you don't know what you know, and you maybe learn on your own. You watch a YouTube video, simple enough, right? I would try it. So you just expecting when the market reach up here, and some of you I know would have done that before. Some of you probably still doing it, or you know somebody who does it. Once the market reach up here, you just go and sell because it had to go down, right? You believe the lines on the chart sturdy enough to hold your trade. These lines, as time and time has revealed to us, means nothing. These lines on the chart is macaroni, as I say. It's sturdy enough. Yes, you could put a little bit of attention to macaroni, but the slightest amount of force, it is break, right? So you can't really hold on to these lines too strong. So you can't draw a line on the chart and expect the market to stay within your lines completely exactly how you want it. So don't feel you're going to draw a line here, and as the market hit your thing, it have to do something here. Nah, do nothing, bro. Right? Blaze right through a macaroni line now. Right? And I didn't say it mightn't be a little thing, but for the amount to get decent size trade on, trash. So because a lot of retail men, shutdowns, does try to predict where the market will go, and they feel and know, they go just take trades here and they go flop around. So you would realize when the forward now, so it go look pretty, but if we scale down, we don't know the real candle to that down here, and this not looking perfect whatsoever. Right? So I boy go take a trade. What the market would do is the know, right? Bug not off. It has almost seemed like when you enter a trade, the market, I got right in the group there, I tell me about the market alive, bro. They know. It's like, when you think about something, you talk about something, you see an ad fate on Facebook, there's one of them listening, they are. When you enter a trade, if you don't know, you feel this program, this software, not man-made by, you feel it not housed somewhere. You feel do have a company named Citadel putting on this. There is. They know where your money is. To go down the conspiracy rabbit hole a little bit. Right? When you enter the markets and you sign up a brokerage account, they could do research on it. There's something called A book and B book. When you enter trades in the market, you will either get placed on the A book or on the B book. If you enter the trades and you consistently losing, they will B book you. They know you are a loser. What the company would do, let me just say, let me use Tickman for example, let me say, what they will do is that they wouldn't place your trades live. They will take the other side of your trade. What I mean, when you click buy, them click sell, because 99% of the time you wrong, and they have more money to hold you down than you. The B book here. If you're A book here, they will put your trades through, so they will take your trades, right? In addition, they're charging the commissions for actually entering the trade. The commission to the space is spread. So every time you enter a trade, it ends up in red. Right? It's always end up in drawdown. The little drawdown is to just take money out of your trade. So if you take a raw account, they will give you exact entries. So you will get better entries, like if it is you're entering on cryptos. However, you'll pay more in commissions. They will charge you actively. So if you look at the MT5, you would see your commissions is zero, right? Because they charge you on the spread, right? Some of them have variable spreads, some of them have fixed spreads. We have to go down that road, right? Or you pay on the commission, but they will pay and they will book you. They know, they feel that how you just get a broker statement, the log in here. So when you enter in trades, right, they know where you enter in. The companies working together, right? The like when you're getting paid out and if the money coming from, bro. You know what I mean? So the brokers not necessarily a friend, eh? And these guys not on your side. Is the pure purpose of trading is to make money. My trade not add any value to the world. You know, trade not do nothing good for the environment. It's just pure greed, bro. You land here, you get coming here from one thing, money at main expense. It's a vicious place. Right? If trading was a real life thing, it would have bloodshed and gore. Right? But how violent it is. Think about it. When you come in here, the market's no mercy, you know. No mercy in this thing now. It's a very visceral place. That's why it's so emotional. That's why it's intense now. But think about it as a battleground. Right? Man looking for the upper hand on the hand thing now. But and you come into trade, no matter how you win. I don't care what you do. If you can leave a winner, it's war. So it don't matter if you're in a war, like a real war, like you know the thing you think and they say you wouldn't do. If you're in a street fight, you go bite a man. If you're in war battle, like men trying to kill you, going and bite a boy. You know that type of way? And if you don't bite a boy, you're going and dead. Understand? So yeah, they play dirty, you know. So it don't matter what you do if you come in here, you have to win. Right? So that is what the market doing, right? Them playing to win. Right? You just don't know the rules of this game. You think it's fair. So what they will do, they will know where you take a trade and they will generate liquidity. So they will be flopping around here. So this is called accumulation. So we're going on the ICT rabbit hole. Once again, everything anybody tell you, take with a grain of salt. Right? Me included. ICT have a concept that is accumulation, manipulation, distribution. Accumulation is the collection of orders. That is consolidation. That is when the market going up and down, up and down, up and down. All these shitons fighting up in here. Man, taking trade. Because if you scale out, because we're only 4 hours, we would see that we're in a consolidation area here. Right? So we know, best we all learning from me, all will know there's no trading here. We're waiting for these structures to get broken. If you scroll down on a time frame, the market would look like it's trending upward. So that men who in here all now trading. The market now open. It's Sunday. Wait for tomorrow. If we have any news in the morning, I sure we will be on news in the morning, all kind of thing. And men done trading. Right? And nothing too much. That's our orange for like recap by FOMC, but that wouldn't mean anything. FOMC done gone. Right? It have let the market settle and see what happen. But then hour the market open, man, and rushing and thing, right? But we better, so we go wait. We get time. We know when we catch one, we catch one. We only need 1-2 trade, you know? And if we get one good trade for a week, we real bad. Imagine, you know, you get your groove, you get a good trade, you enter Kirk lot size, you hold the trade to the very end. Imagine what your money gonna look like. As I said, I was telling them, I think it was I take like 2 trade. It was the last one, 2 trade 500 a piece. Get you, right? Still make a whole $8,000. 2 trade. Normal. And there's no way where men could really, you know, that's not way what they could make. You know, I could have put more lots and I could have enter more trades, whatever, you know. It's just still conservative now. If you think about that, I take 2 trades for the month. You still make $8,000. Might seem like small because it's whatever, but you know what I mean, number. Right? So patience. So accumulation, manipulation, distribution. Accumulation is consolidation. That's when the market going up and down. It's not sure about what they're doing. So it's taking orders up and down, up and down. So it's accumulating orders and money. Right? Either you will get an institutional purchase, a fundamental development, right? That will push the market in a particular direction. They already know where the market going. When we get news, the news don't pass. So when we reading things and hearing about things, it don't happen already. Right? All we just try to do is jump on the train of what already going. We don't know. Right? So don't try to be smarter than the market. And I see everybody talking about thing and this and that. Don't try to be ahead of it. And you'll bust your, it's like trying to figure out the mysteries of the universe now, boy. You know, like where we really come from and thing. It predicting when the market going right up there, we're trying to figure out, you know, like if it ever afterlife now, boy. It's one of them things that don't even bust your brain on with your mortal thinking now. Right? So you have the accumulation where the market keep taking orders up and down before it eventually manipulates the market, right? Which is the last little set of taking uh, orders where it would induce it to take either buy or sell on the wrong side of the market, right? And then it would distribute. Distribution is when you finally get this, right? So this is the perfect example of what that would look like. So the market, this is the exact concept, right? So we have, so if we scroll down a time frame, we would see it's a big sideways movement, right? So this is accumulation, consolidation. We have manipulation, which we could identify as the liquidity sweep, and then we have distribution, when the market finally let go into the direction and head. In order to get money to sell, because think about it, right? As I always say, we use the noodles, right? Use an again, practically what the market does do. So we're looking for patterns, right? The market will do anything new. So the more time you spend on the market, is the more you would see the market in a different light. So what I urge everybody to do, some of you, the more intermediate ones, is this, right? And this is what helped me. So the first thing that I did in trading is commit money to lose. Take the pressure off of trading. You know, you have your first account, you're now learning the concept, but you want to live on it. Right? What you're looking at with me is 2 years. And this is 2 years at 18 hours daily. So this is not even 2 years for you. I didn't have a job for the past 10 years. Right? So I could have had 18 hours a day for 2 years and still live normal. Right? Most of you wouldn't have that luxury. Right? You need money now, so you need to go to work. So you wouldn't have 18 hours every single day to put on the charts. And you had to put where you could. Right? So I say that to say lengthen the time. Don't apply pressure to trading. You will not get through if you apply pressure to it. The more you need the money is the further away from that money you're going to be. You need to trade with a clear mind, a clear conscience, and not in a place of need or lack. If you need this money or you lack in the sense of, and if you know you're dependent on each trade to pay bills, you are not going to get through. Right? The song mad is the sad reality. If you don't believe me, do it and see for yourself. Right? So you have to be able to be patient. So don't look at it up too close. You know, give yourself time and understand it's a journey. You're not expected to be good at anything in our stand. That's why in our group in particular, it's a safe place to take a L. Now our post losses and things too. Sometimes we have bad days. It does happen. Right? So trading is not, you know, everybody, I don't like the ego thing. Everybody like to make it seem like it's the world's best trader and there's only post wins and thing, and that's simply not how it does go. Losses included in that. If I tell you when I trade, you could. If I tell you don't lose any, you can't. Right? It's impossible to. So take your time. So when you now start, which I did, was I committed money to lose. I was trying to make money to live. Right? Not necessarily live, but you know what I mean? I'm trying to make money. I couldn't make any money, as most of you can't. Can't make no money, right? Because you're applying too much of pressure to it. What I did is I funded an account, and then I was like, oh, yeah, we're good. I don't care if I make any money or not, right? Wherever, trading is a scam, right? But I like to do it. Let me just go, right? If I get through, I get through. And when I committed the money to lose, I still lost the money, but I had a wonderful experience trading because I wasn't expecting anything, right? And I guess some decent wins that I never gotten before. As I say, ultimately, you know, your mindset not right, you over trading, you're emotional, so you're gonna lose. I still lost, right? But I guess some of bigger wins there, right? I hold some of my longer trades there because I forget about the trade and thing, and I had a better trading experience now. Right? So when I commit money to lose, that is something I did in the beginning. That is something if you can't afford to, I would urge you to do it in a live account. Parallel fund a little 50, a little 100 in a live account, not the prop firm, and just commit money to lose. Right? So you go in there and you're practicing to do your same thing that you think you know. You think you know what you're doing, okay, you get a few 2-3 classes, every week you come, you get a little bit better, you do it more, you understand, you feel confident, yeah, but I could really do this, try a little thing in your life, go inside. The reason for doing that is so that you would feel how trading is. Right? So you knew, you don't know, you had to get out your system. So you have to lose. Right? You're a trader defined by losses, not wins. Everybody that's win, you look around, what trader you that see this loss? None, because everybody lying, right? Your trading career defined by your losses. We just win until we get one bad loss and then it's game over. You win. We had a hot streak, boy. But you know was up. How much time we sing that same song? And then you get a loss, and then you start from scratch. So your trading career not defined by your wins, defined by your losses. Simply as how with a prop firm you only have 10%. So when they tell you about 10,000 on account, they don't really have it. It's only 1,000 you have. It's the same concept. Your trading career defined by how well you take your L's. That is why like the other day, as I said, I was proud to show you that I get 7 losses in a row and still in profit. Right? So that's a good indication of how well you take your losses now. Because you're going to lose. How well do you take your losses? If one bad loss sending you down, then you're not ready yet. And remember, you have no safety net in trading. Your safety net is risk management. If your risk management not there, you're going to crash and burn. And that's the last line of defense behind your consistency, behind your discipline, behind everything else. And so the next thing that I did, so we get back to the chart, I just given all the progression, right, for who may help. The next thing that I did after committing money to lose was going back to the demo. So when you now start, we have to feel trading, we have to get emotions out of the way, we have to take we L's, we have to, say trading is a scam, we have to be ready to give up, we have to do all of them things, cycle through all the emotions, to look for other opportunities, whatever. Right? You have to go through all of that, and then you have to circle back to now, if I get to a trade, I'll score, and then come back to it. When you reach down that breaking point at first, and if you're ready to give up, but you ultimately decide not to, the next thing you would do is go to a demo. You already know it is the loss. You already know what trading is. There's no reason to consistently lose money. So we have some of the guys here, right, who I told this privately, and they're not trading live anymore. So you'll see some people just be posting results and then they're not posting any results, right, because they're demoing. You don't have to consistently lose any money to get better at trading. What you should do is start to learn the concepts. So what you should be doing there now is trying to understand what you're learning. So that was my next step, my next progression. Right? So like for a whole year, I fight up and take L's, and then for like 6 months I demo. No live account. I put no money in there. Right? I just practice the concepts. Right? So you're learning about this, you're learning about that. Fund your demo account with $1,000. Right? Don't put no 10,000 in it and trading 20 lot. That's not realistic. You're not going to actually trade like that. So then what you're practicing? Right? I tell at that time, like, bro, you're not going to put how much of $1,000 in your real account and be trading no 20 lot and thing at that time. It's not practical, so you're not actually getting better. You're not actually sharpening anything that you're going to be doing. So your demo is a simulation of what you would be doing in your account. You have to treat your demo like a live account. No, you wouldn't get emotion, but we don't need it anymore because we already get the emotion from losing. We don't feel that sting. We know what that is. Nobody can tell you about that. You don't know what that is. And you go back to the demo and practice your concepts. Your demo is where you will build your discipline. If you can't even stay disciplined on your demo account, bro, how you going and be disciplined in your real account? You understand what I'm saying now, right? You have to be disciplined, at least in the demo. You have nothing to lose. So wake up every day, go on the charts, take 0.01 consistently. If you look at my thing, you will see one lot size. Over and over, one rigid thing. If you can't conquer yourself and do that, how are you going to make money doing this hard thing? is literally the hardest way to make the easiest money. There's nothing harder than this, I would say. Right? That real man who have all kind of accolades, you can't put them on this chart, bro. Take a different kind of person to do this. Right? So after you done your licks, go on the demo and practice your concepts. See if you could grow your demo account. See if you could grow it consistently and slowly. See if you could be patient in taking trades. See if you could take one lot size. Right? See if you could not do wildness. If you lost, you know, and see what you do with your demo account. And when you get done and you're comfortable with that, however long it take you, it might take you 2 weeks, it might take the next one a month, it might take the next one a year. However long it take you, it don't matter. After you do that, then you come back to your live account and you execute. Now, you have a better understanding of how the losses is, so you could feel that. You have a decent strategy or something. Because it's the same market, eh? The demo and the live is the same thing. Right? So whatever you do in the demo, you could do, obviously you'll be a little bit more difficult because you're putting back a bit more emotion. But now you have a little bit more backbone and you have a little bit more information, you have a little bit more discipline, and you practice on them. And that is what pushed me over the edge. So that was my progression. Start off like everybody else, run long trades, blow accounts, and then I decided, well, yeah, we're going on. Me and fight that. Let me see if I can really decide to see if I could do this thing properly. And I practice on demo, like 6 months, no money, right? And I could have take losses, bro. I could have fun back. It didn't matter. Let's take this demo, right? And then after I get a little thing, the same that I teach and all, when I get that for myself, right? I came back. And to show you how devoted it was, for those of you who was here with me for a while, I disappeared. So some of you now meet me here like now. Last year I took like 4 months off. I was in the group was dead, had no programs. I wasn't even selling my crypto. Nobody could call my phone. I was disappeared. I ghost, fall off the face of the earth. I was sharpening my skills. Nobody see me. And who was here? I wasn't available. I went by myself, right? Amongst other things, and make myself better. And come back and I'm a little bad on the Forex, dog. You know what I'm saying, right? So you do that for yourself, right? You know, it obviously in the group, so you don't have to be that distant, but you work on yourself silently and privately, you know, and you dig deep and do your thing, right? So if you demo you could demo that you at the end of the day is you versus you on the charts, right? So good. So we had our concept there. So back to what we're doing. So we have the concept, right? So we have the accumulation here where the market taking orders. We have the manipulation where the market fake you out, and then we have the distribution of the sell. Now, all of that fancy talk to tell you this. The reason why we just wait for the market to retest a zone is so you could duck this. That's simply what this whole thing about. So right, we understand what it is clearly, so now we can know why I just be telling you to wait for the retest of the market. Simply because you never know when you're going to get a liquidity sweep now. Right? Right? So that is basically the whole class day. Wait for the retest because you just get things like this. You don't know when you're going to get manipulated. So when the market impulsively go in one direction, wait to see if the market break back in like this. This year is a stop hunt or a liquidity sweep. This year catch real men in the wrong direction, right? So it consolidate, right, which is accumulation. We get a liquidity sweep here, which is manipulation, and we see it Friday, right? The market doing all kind of thing, and big impulsive moves, lower time frames. So it's happening everywhere, constantly across everything, right? Urging it to go in the wrong direction, trapping on the wrong side of our trade. And then we back inside. We get big bullish engulfing, break back in the zone with energy and vigor, and then we trap around again. Right? So we don't know when we will get one whap, come back. We don't know when we will get one again, whap, come back. So we don't know. Right? So we have to wait. So this is the purpose of waiting for the retest. So when you have a zone, whatever time frame you're on, right? Wherever you land on the chart. So This year is it. This year is it. These impulsive moves now. So wherever you land on the chart, right, and you get a breakout, don't trade the breakout itself. Right? At times, so remember, I'm trading kind of random, yeah. Right? So that's why if you trade line properly and you take a L but you do everything correct, don't vex with yourself. The market. It is just do that. Right? So you can have a good zone, you can think, whatever, and then the market could break out like this, and then that market just start to shoot. You never get a retest. Right? About a month ago when gold was just buying sky high, I remember it was a Sunday like this. We stood on the charts. We watch gold break the all time high together as a team. All of us sit down and watch it. And I said, boy, when we get the retest, you go enter, and it never come. The market just buy. We literally get no pullback. Right, we get no pullback for like a week plus, like 10 days. The market didn't give you no pullback. No man jumping, get little scalps and whatever. I didn't trade for like 10 days. The market never print a red candle. Everything was just green. See if you find that period of time. The market just never print a green candle, a red candle, bro. I think it was around here. Um, right. So you just stick to the rules, right? I didn't enter simply because I didn't see what I just looked for. Let me see if there's it here. Right. I think it would have been. I think it would have been something like so. Was it boy? Because it wherever the all-time high was, it didn't have any major structures. It just buy. I think all the way up here. Yeah, and I didn't take all these none of these pullbacks. I think I took none. Right, because it had no major structures. It couldn't pull back against anything. You know, it just shoot. Yeah, it was like this period here, something like this here. It had no major structures. So all of this here, I think I sit down to all of that for the most part. Until it maybe create something like this, a deeper pullback, and then I might think something, but nothing. Alright. So and I just didn't do it simply because it was in the rule that I trade with. I could have, at any point in time the market could have just spin around and eat your food now, right? It could do that. So at your zones, you just wait for the market to break on it. You know, you wait for the retest. Now, as I say, sometimes the market could break out and just start to sell. You go have times when you get more experience and you jump in these trades and you get you. Right, without a doubt. I just do it sometime, rarely ever, but every now and again, I go just take a thing and we go just get a little trade inside, right? No sin. We go have the other times now where the market do this, right, and then it shoot back up one time, right? So if you try to jump in impulsively, you lost. Right? So it is varied, it's random. You never know when the market could just continue going lower. You never know when the market could just shoot back up. You don't know if you get a gradual climb because it could wait for a gradual climb back up like this, and then the market could reach up here and still sell off. You don't know now. Right, so you had to wait. Watch out, we get this candle here, this big red candle, and then the market just chug right back in here, make it look like you're going and sell, and then boom, the market open buys. So you don't know now, boy. So the best thing to do is just do what you know does work for the majority of times. So what you know does work for the majority of times, because sometimes you will do it and it just won't work. And once again, your safety net is risk management. Right? Your safety net is your risk management is what will keep you in the game if you're wrong. You're going to be wrong. How bad are you wrong? Right? So your risk management will determine how bad you're wrong. If it just keep doing this over and over, you will inevitably win more trades. So because you had to have faith in the strat now. So because you know this strategy does work, you know that if I take a L, it's no sin. Now I don't be down when I take a loss because I know for a fact, without a doubt, with results, more times than not, I'll be correct in doing the same one exact thing. So if you just trust in your strategy and not watching candles and not what you feel, if you just trust purely on what you see, that is why we so rigid on price action. I don't care necessarily about the fundamentals. No, fundamentals are arguably more important than technicals because it's telling you, it actually telling you why I can't moving without a doubt. But while that is so fundamental, it's not visual. I have nothing to still rub up against. Fundamental, it's just a feeling. I think this will happen. I think that might happen. It could be correct, but if it correct in your overall fundamental, where you're going to enter. So for the people who like to talk awful, they will fundamental. Well, the market going to do this because the market do that. All right, no problem. You have an overall direction. You're correct. Where you go enter the market. If you put too much weight on that, just focus on the technicals now. Right? People might say, boy, I think fundamentals, whatever. At the end of the day, you need the technicals for entries. The market will always tell you the direction you're going. You're not blind. Either it's going down, it's going up, or it's going sideways. Right? I know what the market could do. It could only do these three things. Either it buy, either it sell, or it go sideways. Right? So I know what the market doing. So I don't need to predict or know the fundamentals of where the market going to go. Why? I'm a long-term investor and I'm going to hold my trades for no certain days and weeks and years. I don't know. I don't care. What the market is showing me at this very moment. Pure price action. The market showing me this, I'm going to trade that. Right? And I would take trades based on exactly what the market tells them at this particular point in time now. Right? So with technically we know that when the market break out of zones, once we get retest and the market close, we know chances that we at least get 2-1 based on this pure price action based on your strategy. You just do that. So have faith in the strategy. So don't think too much and confuse yourself about all why things happen. Right? Now it's fun to talk about fundamentals. It's been nice in trading to speculate and talk about and guess. When it comes to purely trading, disregard it. Right? This not disregard it to the point of ignoring it and be oblivious to what's going on the market. However, what the chart showing right now, many times you will see the market going to go in one direction, and because the fundamentals say so, and then it don't happen. So then you get no entries because you're expecting the market to do this based on some news article you read or hear about whenever and read the last to know. You feel them printing the real news so we to hear, right? You feel we really know what's going on. By the time it reached our news reporter, and that news reporter type out that article and upload that somewhere, and that get reshared how much times and reach your ears, you feel you know what's going on? It don't happen, dog. Who the reporter get the news from? And the man who done do it, who done in it, you're late now. Alright, so let's look at pure price action, see what the market doing here, see what the market doing, trade based on that now. Alright, so that is why we're waiting for the break and retest, because the market does do things like this. So that is a liquidity sweep. That is how to observe them. That is how to basically duck them, because this will make you lose a lot of trades. Right? If this could be one of the most common things to make you lose trades, because remember we trade in breakouts. So if the market breaking out and you can't identify when it's doing this, then you're gonna lose your money every single time. Right? So we right at the 8 o'clock mark. Wonderful. So questions, you will take them. If not, we see you all on the chat. Alright, no questions. Let you stick. So I don't know. I would see you there on the chat. We have nothing right now. Just waiting for the market to either break out of the zone here and give you some kind of confirmation of it. Selling, which I don't believe. I think it will buy. If you get the breakout on top, you'll get some trades this week here. And I know no direct bias from my scene right now. Simply based on this little area here. So I need to see something more. In terms of what we're doing. So we kind of just in this big range here. We relatively close to all-time high. So it has taken a lot for it to break. So I know if we have those level of fundamentals to push the market to that height, and I don't know if we have anything going on that make the market want to sell. So for right now, we just sitting down until we see some better movement, right? So we will see you in the chat later.
Later. Thank you.
All right.
Thanks, man.
I know better.